What if I told you the most powerful financial influence in your life might not be your bank, your job, or even your investments, but the information you consume every day? CNBC is not just a news network. It is a mirror that reflects investor psychology, a megaphone that amplifies market emotion, and a magnet for global attention. Today, we are going to uncover how CNBC rose to power, how it influences billions of dollars every single day, and how the wealthy use it to grow and protect their fortunes, while the general public gets distracted by headlines. You are a young professional. You are ambitious. You want to build something real: freedom, legacy, security. But the moment you wake up, you are hit with a wave of information. Breaking news alerts, scrolling tickers, conflicting opinions. CNBC headlines flash green one moment, red the next. It feels like the market is either on fire or burning to the ground. You find yourself asking, what is actually true? What should I do? How are the wealthy interpreting this, while the rest of us react emotionally? This video is not about financial advice. This is about decoding the power of media, the psychology of money, and the blueprint behind how CNBC became one of the most influential voices in the financial world. Because when you understand how financial media frames the game, you stop reacting and start playing like a strategist. You build confidence. You build structure. And most importantly, you build perspective. CNBC was launched in 1989 as the consumer news and business channel. At first, it was a niche experiment designed to broadcast live financial news and market data to a narrow audience of investors. But it had a vision: to give real-time market access to a generation of people who were just beginning to realize they could build wealth outside of a paycheck. By the mid-1990s, CNBC became a household name during the explosive rise of the dot-com boom. Its real-time ticker, its charismatic anchors, and its constant feed of IPOs and earnings gave CNBC the reputation as the nerve center of Wall Street. But more than that, it became a form of validation. If a stock made it onto CNBC, it was legitimized. If a CEO spoke on air, the market moved. This was not just coverage, it was influence. CNBC turned stock market participation into a cultural phenomenon. It brought Wall Street into Main Street living rooms. And it planted the idea that anyone, anywhere, could play the market if they had the right information. CNBC's rise was not just about coverage, it was about timing. Here are the milestones that helped shape its dominance. Dot-com era. CNBC's around-the-clock coverage of tech IPOs like Amazon and Yahoo turned stocks into celebrity brands. Retail investors began trading based on segments seen over lunch. 9/11's attacks. When markets shut down after the attacks, CNBC became a calm voice during financial chaos, offering constant updates that helped stabilize investor nerves. 2008 collapse. During the housing crisis and subsequent banking collapse, CNBC was the go-to source for minute-by-minute coverage of the Lehman Brothers collapse, government bailouts, and market meltdowns. 2016 election cycle. CNBC covered the policy impact of Trump's election and how tax reform, trade, and deregulation would influence corporate earnings. 2020 pandemic. In a world that locked down overnight, CNBC became essential, broadcasting live updates on infection rates, jobless claims, Fed moves, stimulus checks, and vaccine developments that moved the markets hour by hour. Each moment brought a surge in viewership, brand recognition, and cultural relevance. CNBC did not just report on these events. It shaped how we reacted to them. Let's break down why CNBC works so effectively. Fast-paced edits mimic urgency, keeping the brain in a heightened emotional state. Scrolling tickers create a subconscious sense of motion and opportunity. Panel debates and strong opinions activate emotional responses in the viewer. On-screen graphics and colors signal bullish or bearish sentiment even before a word is spoken. CNBC's format is designed for attention, but attention is energy. And if you are not aware of how that energy is being used, it can manipulate you. The wealthy understand this. They use CNBC as a pulse check, not a guide. The wealthy do not watch CNBC the same way as everyone else. They use it to measure public sentiment. They listen for fear, hype, or uncertainty in the commentary. Time behavioral cycles. They understand when retail sentiment is peaking or panicking. Monitor sector focus. When CNBC gives constant airtime to a sector, they know money is rotating or preparing to reverse engineer opportunity. When CNBC headlines scream panic, savvy investors look for undervalued assets. When CNBC shows euphoria, they prepare to trim risk. They are not watching to follow. They are watching to predict what followers will do and position accordingly. But even powerhouses face disruption. CNBC's viewership has declined over the past few years. Why? Younger investors favor YouTube, TikTok, and Twitter for faster, more relatable content. The rise of influencers like Meet Kevin, Graham Stephan, and the FinTech community has shifted trust away from anchors. Critics argue that CNBC has become more reactive than investigative, more theatrical than analytical. Cord cutting continues to eat away at cable audiences. Still, CNBC holds sway over institutional and professional circles. It remains a must-watch in trading floors, hedge funds, and executive offices. Why? Because it still shapes perception, and perception shapes behavior. The last 8 years have been a masterclass in emotional cycles. Here is how CNBC amplified and reflected them. 2016. Coverage of tax cuts and deregulation under Trump sent markets soaring. 2018. Trade wars with China brought panic headlines and market corrections. 2020. Daily death counts, unemployment spikes, and vaccine optimism turned CNBC into both therapist and alarm bell. 2021. Coverage of meme stocks, crypto surges, and inflation stoked both euphoria and anxiety. 2022 to 2024. Focus shifted to interest rates, Fed meetings, artificial intelligence, and the fear of recession. CNBC's tone moved between cautious optimism and doomsday warnings. The constant emotion. Every narrative was wrapped in emotional language. Fear sells. Hope sells. Confusion sells even better. CNBC delivers information, data, numbers, headlines. Interpretation, what guests say it means. Emotion, how anchors make you feel about it. The masses react to the emotion. The wealthy act on the interpretation. The wise watch for all three, and then build a plan. Here is your new CNBC strategy. Detach emotionally. Watch to learn, not to react. Track sentiment shifts. Pay attention to how tone and coverage evolve over days and weeks. Journal your reactions. What made you feel excited? Nervous? That is your bias being exposed. Cross-reference stories with actual data. Headlines often exaggerate. Use CNBC as a temperature check, not a thermometer, not a compass. When you do this, CNBC becomes empowering, not overwhelming. Drop a comment below. What has been your experience with CNBC? Does it help you? Stress you out? Or do you see it now with new eyes? Like this video if it opened your mind. Subscribe if you want more psychological and financial breakdowns every week. Share it with someone who watches CNBC every morning and deserves a different perspective. And above all, press play on our How You Can playlist daily. Let it run while you work, cook, or drive. Let it program your subconscious. Let it create wealth habits through repetition, not hype. You do not need to know everything. You just need to see what others miss. CNBC is not a bad source. It is a powerful one. But power without awareness is dangerous. Learn to decode the message. Learn to feel the tone. Learn to watch the watchers. Like, comment, subscribe. Welcome to the How You Can movement. Let us master markets together.